Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 30th, 2025, and we're diving into Arch Capital Group's first quarter earnings report for 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Arch Capital Group has just released their Q1 2025 earnings, and there's a lot to unpack, from their net income figures to the impact of recent catastrophic events.
Revenue and profitability overview. Let's start with the top line. Arch Capital reported a net income of $564 million, or 1.48 per share, for Q1 2025. This is a decrease from last year's $1.1 billion. John, can you explain the factors behind this performance?
Absolutely. The decrease in net income is primarily due to the catastrophic losses from the California wildfires, which significantly impacted their insurance and reinsurance segments. Despite this, Arch managed to achieve an adjusted EPS of 1.54, beating the forecasted 1.37, thanks to strong underwriting performance and favorable prior year loss reserve developments.
That's impressive, especially given the challenging conditions. How did their return on equity fare?
Arch reported an annualized net income return on equity of 11.1% and an operating return on equity of 11.5%. These figures reflect their ability to maintain profitability despite the adverse events, showcasing their robust risk management and underwriting capabilities.
Segment performance and catastrophic impact. John, let's delve into the segment performance. How did the insurance and reinsurance segments perform, especially in light of the catastrophic events?
The insurance segment saw a loss ratio increase to 66.0%, while the reinsurance segment's loss ratio rose to 66.9%. These increases were largely driven by the $547 million in catastrophic losses from the California wildfires. However, Arch benefited from $167 million in favorable reserve development, which helped offset some of these losses.
It seems like the catastrophic events had a significant impact. How did Arch manage to mitigate these effects?
Arch's strong underwriting discipline and strategic risk management played a crucial role. They maintained a combined ratio of 90.1%, which, while higher than last year, still reflects their ability to manage costs effectively amidst challenging conditions.
Investment income and strategic initiatives. Moving on to investment income and strategic initiatives, Arch reported a net investment income of $378 million. How does this compare to previous quarters?
Net investment income was slightly lower than the previous quarter, primarily due to a reduction in investable assets following a special cash dividend. However, Arch's strategic initiatives, such as the MCE acquisition, have positively impacted their insurance segment, contributing to a 24.4% increase in gross premiums written.
That's a significant increase. What about their capital management strategies?
Arch repurchased approximately $196 million in shares, reflecting their commitment to returning value to shareholders. Additionally, their book value per share increased by 3.8% to $55.15, indicating strong financial health and effective capital management.
CEO insights and future outlook. Finally, let's discuss the insights from Arch's leadership. What did CEO Nicolas Papadopoulo have to say about the company's performance and future outlook?
CEO Nicolas Papadopoulo expressed optimism about Arch's ability to deliver long-term shareholder value despite the competitive market conditions. He emphasized the company's strong underwriting culture as a differentiator that allows Arch to stand out and capitalize on market opportunities.
It's encouraging to hear such confidence from the leadership. What can investors expect moving forward?
Investors can expect Arch to continue focusing on strategic growth and maintaining their strong underwriting discipline. The company's proactive approach to managing risks and capitalizing on new business opportunities positions them well for future success.
Key takeaways. In summary, Arch Capital Group has demonstrated resilience in the face of significant challenges, with a net income of $564 million and an adjusted EPS of 154, beating analyst expectations. Despite the impact of catastrophic losses, the company has maintained strong financial health and continues to focus on long-term growth. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing Arch's performance and prospects.
Thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Arch Capital's performance in the comments below. Until next time.